Good evening, everyone. My name is Yasser Arafat, and I will be presenting today's market wrap-up. First off is the G20 summit. Investors around the world are eyeing on the current G20 summit happening in Osaka, Japan. Today was the first day of the summit. Currently, news have come up of US President Trump and Chinese President Xi Jinping meeting tomorrow to discuss the current trade war between the two largest economies of the world. For now, Washington has tariffs on $250 billion worth of Chinese imports, and Beijing has retaliated with levies on $60 billion worth of American goods. At the same time, good old Trump has threatened to cover another $300 billion of goods, which is essentially everything else China exports to the US. Tomorrow's meeting will decide the outcome of both NASDAQ and Hong Kong Stock Exchange. Currently, trade volume of NASDAQ index has decreased from 2.1 billion yesterday to 2.0 billion today. Next up is Ford. Ford laid off 12,000 workers in Europe and is making deals with Volkswagen over sharing electric and self-driving technologies. Yesterday, Ford announced that they are laying off 20% of their workforce and reducing the number of plants from 24 to 18 by the end of 2020. Ford will be closing plants in South Wales, France, and 3 plants in Russia at the same time. Ford is selling the Slovakian plant to Magna as a step towards the announced restructuring. Earlier in January, Ford announced it was making deals with Volkswagen to share electric and self-driving technologies. The recent job cuts might be an indication towards that deal. The stock market has speculated the same notion by increasing the trade volume on Ford stocks from 33 million to 42 million. The closing price is $10.23 with a 0.2% increase. Oil rebound drives Canada's best 2-month GDP gain since 2017. According to Statistics Canada, GDP rose 0.3% after a 0.5% gain in March, marking the strongest 2-month increase since the end of 2017. The figures topped the 0.2% gain expected in a Bloomberg survey of economists. It's the first GDP print of the second quarter and depicts an economy showing clear signs of a rebound after stalling at the end of last year and the beginning of 2019. Even without any more growth in May and June, the April number puts the economy on track for at least a 2% gain on an annualized basis in the second quarter. The key driver of growth was oil. Output increased by 4.5% in mining, oil, and gas. Oil sands extraction jumped 11%. This was caused by a positive increase in TSX by 0.46%. Now for the overall market wrap-up. First up is the global indices. NASDAQ increased by 0.48%. TSX increased by 0.46%. S&P 500 increased by 0.54%. FTSE 100 increased by 0.31%. CAC 40 increased by 0.70%. DAX increased by 1.04%. Hang Seng Index, because of the G20 summit and the trade war, decreased by 0.28%. S&P ASX decreased by 0.71%. Nikkei index decreased by 0.29%. Time for currencies. Okay, now we talk about the performance of the Canadian dollar. Currently, the Canadian dollar is not performing well compared to 3 major currencies, which are the US dollar, the European euro, and the Japanese yen. Next up is oil. Oil price is relatively stable with a slight 0.08% increase. In terms of metals, gold price has declined by 0.24%, while copper, on the other hand, is increasing by 0.04%. This is the end of the market wrap-up, and to the graduating class of 2019, have a great life.